Thanks for joining our Take 5 for Finance, where you can take 5 minutes, learn something cool about small business finance that's going to help you in your company.
Yeah, thank you so much for joining me for this segment of 5 for Finance. Guest Scott Baker. Scott, tell us just briefly about your brand and your company.
Sure. So I've spent over 25 years in-house HR. So I know what it's like to be part of an executive team and that sort of thing. And about 3 years ago, I went off and did fractional CHRO, fractional VP of HR, very similar to a fractional CFO. And I come into companies, my specialty and my niche is between 10 and 500 employees. Maybe you have an existing HR team. Maybe they're kind of lower level. Believe it or not, half my clients are clients that have PEOs. So some companies say, oh, we don't need you. We have a PEO. A PEO doesn't do all of your HR. They do just the bottom basic stuff. It's the bigger stuff that's going to bite you. And the bigger stuff that has more of an impact. So that's what I do. I have clients all across the country and in almost every state.
Awesome. And how do we find you?
You find me on LinkedIn, Scott Baker at Stage 3 Leadership. So think about a Saturn V rocket, and Stage 3 is when you burst out of the atmosphere and you're on your way to the destination. So
Awesome.
stage3leadership.com.
Is the 3 a number 3?
The number 3, yes.
All right, very good. In the Carolinas, number 3 was one of our race car drivers, so we go around about that.
Yes, exactly. Yes. Love it, love it, love it.
Contract labor and the new rules around what is a contractor and what happens if you have a contractor who is in Mexico or the Philippines. Do you have to withhold taxes for them because they're a non-resident alien? Is that something you can address?
It is. What I would probably do is I would address that more from the perspective of get an employer record. But I would also say with that piece is there are financial liabilities, because if you don't have an entity and that employee is working directly for you and not through an employer record, then the company can be liable for all taxes.
Right.
Right? Even U.S. revenues. So you can be taxed on U.S. revenues, or global revenues would be another way of saying it. If you have an employee in some countries, let's say you have an employee working in Singapore.
Right.
But and they're not just sales, they're going back and forth, but they're actually in Singapore working.
Yeah.
And obviously it has to be for a period of time. But so when you have that happening and you don't have the employee working as part of, let's say, a Singapore entity,
right,
or you don't have the employee working through an employer of record,
right,
then you actually have an employee in Singapore. So you should be paying Singapore taxes, and Singapore can come back to you and say, listen, you have an employee in Singapore that is contributing to your work as a company, as a global company based in the United States. You now owe us corporate taxes.
Oh, and is that true whether this Singaporean is a W-2 or a contractor?
Because you are having the person work in that country. Now, if it's a contractor and you're hiring the contractor through an employee of record, so you're not the main employer of the contractor, but you're employing the person through a third party. You're paying the third party. The third party then's paying the taxes and paying the employee.
Yeah.
Then you're okay. But if you're directly paying that person, then the Singapore government could say, listen, this employee really was an employee directly of yours.
So it gives us nexus in Singapore for the Singaporean government to say your company exists in my country, even though you're just paying them as we call it a contractor, right? We hire people Fiverr and off of Upwork, and they happen to live in the Philippines, and we pay them $5 an hour, and they do whatever they do. They make little graphics for us, or they edit a podcast, and that could make me a Singaporean company, and I would owe Singaporean taxes on all of my revenue?
Not necessarily. So if you're doing it through Upwork, and Upwork is fine because you're paying Upwork directly.
Oh, well, no.
And then Upwork is paying the employee, whoever the contractor is, wherever they are in the world. You're paying it through Upwork. You're not paying it to Joe Smith, who's Singapore. You're paying it to Upwork. or Fiverr or whatever.
But if I meet these people on Fiverr and I pay them directly, I'm just sending a PayPal, it says Zoom, XOM, Zoom payment over to Pakistan. Now Pakistan wants me to be a registered company over there and thinks I've opened an office and wants me to pay taxes.
That could be, right. Wow. Now, here's the thing. Whether they actually enforce it or not, who knows?
Yeah.
But think about a company with a lot of money, or you step on the wrong toes, and all of a sudden they say, hey, Singapore says you owe us money on your US revenues, your global revenues, because you have an employee in Singapore.
Yeah.
And you would say, well, we only have one. And they would say, do you have an entity in Singapore? You say, no. Are you paying the employee directly? Yes. Are they paying taxes in Singapore? I don't know. Are you paying taxes for this employee in Singapore? No. Are you doing all of our reporting requirements in Singapore to register the employee? No. Okay, so what were you thinking? Well, I didn't know.
So at that point, I cut the Singaporean employee loose, and I just avow that I'm never going to travel to Singapore again in my life.
Exactly. But you can see how some countries, right, would be like that. Like they could be like that. And you don't know what country it is. Is it Ukraine? Is it India? Is it Pakistan? I mean, what country? It could even be somewhere in the Middle East. You never know.
Yeah, so this is an interesting perspective, because I was thinking about it the other way around. I'm thinking, what is the US government going to say about my contractor who lives in the Philippines? And what I've read is that there is a term called a non-resident alien who is still responsible for US income taxes on income earned in the United States, right? So, Joe, who works in the Philippines, I send her $500 a week to do my video editing. And suddenly Uncle Sam comes to me and says, wait a minute, I don't care where Joe lives. That's American dollars that you're paying to a person. You should be withholding tax on them, or Joe should be paying US taxes. Did I get that right also?
You could. I'm not necessarily looking at it that angle, but that could be, one angle. But you in the United States, I mean, we contract with people all over the world, no matter what it is. But usually when we do, we pay through a third party that then pays that person.
Yeah.
Well, let's say you have an employee that says, I want to go live in Singapore. Okay, now you've got tax impacts, right? Yeah. Or you have a contractor and you pay that contractor directly in Singapore. Do you have a contract with that person? And, in some countries, you're required to have a contract, a written contract that spells out what is termination, what are the termination provisions, what are you paying them, what are you paying them holidays, what are you paying them in terms of insurance and pensions and things like that, right? You think about Europe in that case. You can't hire just anybody in Germany without a contract. You can't hire somebody in the UK without a labor contract. You have to have a labor contract. So you have to have somebody locally. It's not just as easy as, hey, boss, I want to go and work in London. I've always wanted to live in London. See you later.
Interesting. All right. Very cool. Well, okay. So you bring up the point of a remote worker who wants to live in a different state or a different location while he's doing remote work. Let's change the subject and talk about a full-time employee who says, hey, boss, I'm remote anyway. I want to go live in California. I know that the company is incorporated in North Carolina, but San Francisco has always been my favorite city. So see you later. Please send my paycheck to my new address in California. How long do they have to be there before I become responsible for California unemployment taxes and California registration and California income taxes withholding for their employment record or their employment income? How long do they have to stay?
David, you're not gonna like this answer, but this is an attorney's answer to that question. And I'm not an attorney, so everything we've talked about, I'm not an attorney. It depends on the state. And there are states, I have a graphic that I did not create, but I borrowed from the internet that basically says what states are considered to be very friendly and what considers are very unfriendly. Guess what? California, Colorado, other states are very unfriendly. So you can only work there a matter of days. In some states, it's a day. It's 24 hours.
Wow.
and you are liable to have to register that person in that state and pay taxes.
Yeah, we used to call this the professional baseball player problem, right? Where the baseball teams would drive around the country and play one or two or three games at each stadium. And at the end of the season, every person on the baseball team now owes taxes in almost every state.
Sure.
Yeah. Yeah.
Yes.
Okay. All right.
So-
This is going to start to make sense.
Yeah, so good news may be coming. Congress is looking at a bill that would, specify that you have to work in a particular state for X number of days or more before you are required to pay state taxes. But remember, this comes from two different angles. From an employee perspective, you've got to pay state income tax. And also from a employer perspective, you have to register the employee in that state. You have to. And you have to withhold state taxes, and you have to pay workers' comp insurance, and you have to pay unemployment insurance, and you have to do reporting requirements for various states. So, for example, California has a report that you have to complete by May of every year. It's coming up fast. If you have 100 employees or more, which includes contractors, includes people that you hire through third-party employers, and you have one employee in California, you have to file this report for all of your employees.
Wow.
So let's say you're in North Carolina and you have over 100 employees, you have one employee in California. Guess what? You have to do this report in California for all of your employees. Yes, your employees in Carolina also, because you had one employee that said, you know what, I want to go live in San Francisco for a couple months.
Yeah. Well, this is great, Scott. So I think, we've talked a really interesting arc around both contract labor and W-2 labor. And when you start talking about foreign locations, whether it's a foreign state or a foreign country, the lines start to really blur between what is a contractor, what's an employee, and what your responsibilities are as the employer.
Right.
For filing, for taxes, for legal issues on both sides. This whole foreign non-resident alien status for the United States is tricky, and we didn't touch much on that, but I love your perspective from looking at it from the other side, whether that's California or Singapore, that those geographies have real interest in the people living on their soil and collecting taxes and knowing what's going on and making sure that they've got unemployment insurance, that sort of thing. Yeah. Really terrific. Thank you for joining me, Scott. And join us, if you're watching, join us again next time for our next episode of 5 for Finance.
If you're enjoying this and learning something new about your business, please remember to leave some comments down below, hit subscribe, or send me an email, david@fusecfo.com. I look forward to hearing from you.